Most people don't know this, but I own 183 oil wells. Look, obviously I don't, but I do. I own them in a fractional fund situation, okay? And so it's one of these where I started to realize, the trends that were happening in this space. And, if you know anything about the other deals that we're doing at Build Wealth, it's one of these where, I almost called the company something stupid like supply, demand, and balance, because I'm always looking for the opportunities that exist in the private market that allow us to get in there and capitalize on things that other people can't see, okay? And so what's happening in this space is sort of, it starts with this, okay? Oil reserves, okay, as you're pulling oil out of the ground, okay, it declines by 2 to 5% every single year because there's a fixed amount in each well, right? And so it's declining. And so every year there's about 5 million barrels a day, okay, of production that's required to just maintain flat supply, okay, every year, 5 million. But this has been declining because of, like low reinvestment and all the rest of it. And so ultimately, okay, global energy production today is severely supply constrained with no prospect of rapid increases at all. These things take time to build, okay? And so the theory here is that supply is being constrained. Now, demand, we're at flat, which I presume means if AI wasn't invented, for example, okay, then what we have is JP Morgan has come out and said, look, in 5 years in 2030, there is going to be a 7.1 million barrels per day shortfall just to meet existing demand without any growth. Okay, that's what's happening here. All right, private equity has reduced investment in this area by 87.5%. Okay, in a rolling 5-year average from the 5 years from 2017 to the 5 years ending in 2023. Investment is severely down. This is because of, requirements to invest in ESG, just sort of like reallocation of funds. And this is the biggest area, okay, where capital comes from in order to build these things, okay? There's a couple of partners in this fund. And the first is Jeff Mohajir and his team at Mohajir Energy Advisors. Now, Jeff is really the sort of like oil specialist, right? I mean, he's a geologist. He's spent 4 decades. He and his team have spent 4 decades in this space doing oil, buying, oil wells and natural gas. And so ultimately, out of these 6 funds that he's run over 4 decades, okay, his average internal rate of return is 50%. That's not a typo, 50. Average IRR is 50%, okay? Now, I got into Fund 6 with Mohajir and we are currently 18 months in at a 35% internal rate of return, okay? So these are the guys that we are banking on because these are the people that have spent decades in this space. And because I was in this fund, I actually found Mohajir with their partnership with Aspen. Okay, and this is Aspen Funds. If you've been paying attention to what we're doing at Build Wealth, you know that I've partnered with them on Build Flow 1, the credit fund that we offered that we dropped right here on this stage. And this is Bob Fraser and Ben Fraser, and they are related. And ultimately, I went out there because of what we were doing at Build Wealth and how we were picking up momentum with, bringing these different private investment opportunities to our community. And I went out there to actually talk to them about the oil and gas fund and this BuildEnergy Fund. And ultimately, while I was there, I was building a credit fund and I already had a couple of people signed up and whatever. And when I went to visit them, I realized that they had like 24 people in the office, sourcing deals, doing underwriting, passing or not passing. And so I realized like I could just buy then build my credit fund by leveraging their whole infrastructure, which made it so easy. But anyways, that was a side note. Sorry. I went there specifically, okay, to talk to them about partnering with them and Mohajir on this fund, which is their Fund 7. Okay. So Aspen's track record is also important in this instance. 600 million in assets under management, 250 million in investor capital, and we've got $65 million, okay, in investor distributions to investors. I have gotten a little piece of that, which is fun. So what is the fun strategy here, Walker? Okay, are you like wildcatting? Are you going like offshore? No and no. Okay, what we're doing is we are buying existing producing wells in non-working interest form. Okay, so we have non-operating working interest and in royalties when it makes sense. Okay, and mineral rights. But the thing is like we're not operating in these. The operators are actually publicly traded firms that are well capitalized, that are in the space that you want to be operating your oil well. Okay, and then as a result, we're doing infill drilling. Okay, I want you to, like, the analogy here in business is organic growth. Okay, so we're not only acquiring the oil wells that we're acquiring, because we're essentially doing a roll up in oil wells is what we're doing. We have 70 oil wells currently under a letter of intent that we're going to acquire in this fund. And so we're acquiring these, but then we're doing infill. So our team of geologists, Mohajir and their group, are looking at the land and saying, okay, we can take calculated risks and expand our wells by drilling here and here and here. Okay. Then the fund's mandate is really to maximize total return to the investors. Okay. And that's important in a big, obviously, but like a big part of this is that we have a 10-year horizon in this fund, okay? That's crazy. But one of the things you'll see is that a lot of the wells we're buying right now are actually from private equity firms who have promised, 3 to 5 year exits to their investors. And so they're having to get out even though it's a buyer's market. Okay, so it's a buyer's market. You saw all the investment in private equity has gone down by 87.5%. That means the market has gotten thinner. That means the competition has dried out, and we're able to buy assets for the cheap, right? Because this is very contrarian to what's popular right now. So 10 years, are we really going to hold it 10 years? Probably not. Okay. But the point is that we want our management to be able to make a decision as to when we're in a seller's market. And that is when we are going to sell to maximize investor return. We will reinvest in the first year or two in order to, get more wells up and producing in order to cash flow even more for the to maximize total return for the investors. Okay. This is a buy then build strategy. All right. Now, I'm going to give you some numbers. All right. Now, you might not be able to see it on this stage, and if so, that's okay. We can make sense of this in the portal. Okay. 2025, this year, we are anticipating that we're going to have $23 million of revenue. Okay. And then investor distributions will be zero. We're reinvesting. Okay. By the end of the decade, okay, we're going to have 88.8 million in revenue and 29 million in distributions to investors. Okay, and if we hold the fund, let's just go to 2032. That's probably what, 8 years out. We've got 100. We're going to break 100 million in revenue and have 30 million distributed to investors, right? And then ultimately, when we exit, there looks like there's $90 million in this base case pro forma. All right. Now, I also added the BuildEnergy One. That's our fund, cash on cash returns, just so you can understand. All right. No money in 2025. 2026, probably at the end, distributions will start. 2027, 15% cash on cash. 25% cash on cash. 35.6% cash on cash. 44.4% cash on cash. The pro forma here at base case states an actual, if it runs the whole 10 years, 30% cash on cash returns while you're cash flowing with like a 6.4x, kind of exit at the end. Okay. So, the best diligence that you can do is to have me, okay, a couple years ahead of time, go invest my own money with the same exact team. And that's exactly what I did. I'm in two different entities that I own are invested in this group. And as you can see, 2 days ago, I received almost $8,000 in checks, and the amount of work that I did in this fund is zero. Okay, so I hope that for you. But even though I was invested in this fund, and even though I already diligenced the heck out of Aspen, I still brought in my former vice president at Goldman Sachs to help me review all of the underwriting and further expand our level of diligence. And we went deep and hard in a way that you can only do when you're coming in with us as a group to take a big chunk of the fund out. Guys, this is what I did. there is a family office subscription, okay, in this fund that has a $5 million minimum investment. And I took that subscription for us, okay? Why? Because it comes with a 15% discount on share price, okay? And then ultimately we are splitting the share price just like that, okay? So in other words, 7.5% of a discount you buy the minute your money comes in. So you're making, like, on paper, 7.5% the minute that you invest in this deal. So I think that was pretty awesome. Target annual returns 26%. In this, I'm assuming that we're not going to hold for the whole 10 years. Maybe we would, in which case that'd be higher. Exit multiple 6 to 7%. Target internal rate of return, you're talking 28 to 32%. If they do that, this is what's in the PPM. If they do that, it'll be one of the worst performances of their 40-year career. Just throwing that out there. You make your own decision. If you are interested, talk to Mike. He's great. I'm getting texts all day long from our community saying, like, Mike is so great. Mike Brown has come on as the investor relations at Build Wealth. He was the perfect fit for so many reasons. He personally has invested in everything that we've taken out. Not the first one, but only because he missed it. So this is his cell phone number, mike@buildwealth.com. Let's get on the phone and learn about, your objectives and what it is that you want to do. And then we can find, because we've got a portfolio, even if it's not this one, if you don't like to make a whole bunch of money and also cash flow, maybe we can find something else for you, right? But, it's sort of like we need to figure out what your objectives are and what you're trying to do, rather than, try to sell you on whatever fund we have right now, okay? At the end of the day, Build Wealth is all about, what is Walker investing in, right? Where's Walker putting his money and inviting our community in so that we can have a bigger impact and more fun together, okay? Thank you so much.